Most investors think silver moves slowly. Day after day, the chart barely moves, the headlines stay quiet, and the market feels almost boring. But anyone who has studied the history of silver knows something very important. When silver finally decides to move, it rarely moves slowly. It explodes. In the past, some of silver's biggest rallies didn't begin with excitement or headlines. They began with quiet markets, tight ranges, and long periods where almost nobody was paying attention. Then suddenly, the market woke up. Prices accelerated. Momentum traders rushed in, and within months, silver was moving faster than most investors expected. Right now, something interesting is happening again. After the powerful rally that pushed silver higher in recent years, the market has entered a more volatile and uncertain phase. Price movements have become sharper, corrections have appeared. But beneath that volatility, the market may be approaching a level that could determine the next major move, a single price zone. A zone that traders, analysts, and institutions are quietly watching, because if silver breaks through this level, history suggests the move may not be slow. It could accelerate very quickly. So in this video, we're going to explore why this particular level matters, what could happen if silver breaks above it, and why the year 2026 might become a turning point for the silver market. To understand why this moment is important, we first need to understand how silver actually behaves. Silver is not like most financial assets. Stocks usually move based on company earnings, economic growth, and corporate performance. Currencies move based on interest rates, inflation expectations, and central bank policy. But silver sits in a very unusual position within global markets. It is both an industrial metal and a monetary metal. This dual role makes its behavior far more complex than many other assets. On the industrial side, silver is one of the most important metals used in modern technology. It is essential for electronics, solar panels, advanced medical equipment, and many forms of high-tech manufacturing. As the world continues expanding renewable energy systems and electrification technologies, the demand for silver in industrial applications has been steadily increasing. At the same time, silver has also served as a store of value for centuries. When financial markets become uncertain, investors often turn toward precious metals as a form of protection. Gold usually attracts the most attention during these periods, but silver often follows with greater volatility. When capital begins flowing into precious metals, silver can sometimes move faster and more dramatically than gold. This combination of industrial demand and monetary demand creates a powerful dynamic. But before major moves begin, silver usually enters a period of compression. The market becomes quiet. Volatility decreases. Price moves within a relatively narrow range, and gradually many investors begin to lose interest. This quiet phase is actually where some of the most important positioning takes place. Large institutions rarely chase markets when excitement is already high. Instead, they prefer to build positions during the quieter periods when prices are relatively stable and public attention is low. During these consolidation phases, silver often begins forming important technical levels. Price approaches certain areas repeatedly, but struggles to move beyond them. Over time, these areas become major resistance zones. A resistance zone is a level where sellers historically dominate the market. Every time price approaches that level, selling pressure increases and the market pulls back. Right now, silver appears to be approaching one of those zones. A level where previous rallies have slowed, a level where momentum has faded before, a level that could determine the next phase of the cycle. But something important happens when resistance levels are tested multiple times. Each test slowly weakens the barrier. Think of it like pressure building behind a dam. Short sellers who were betting on falling prices may suddenly rush to close their positions. Momentum traders who specialize in breakout strategies may quickly enter the market. Algorithmic trading systems may detect the breakout and automatically begin buying. And retail investors watching the market may suddenly feel that they are missing a major opportunity. When all of these reactions occur at the same time, the result can be a chain reaction. This is what traders often describe as an acceleration phase. Instead of moving gradually, the market begins to move faster and faster. Silver has demonstrated this behavior many times throughout its history. Because compared to global stock markets, the silver market is relatively small. In that case, price might move lower temporarily. This type of correction would not necessarily mean that the long-term bullish structure has ended. In fact, corrections are often an essential part of strong market cycles. They remove weaker positions, they reduce excessive speculation, and they allow stronger support levels to develop. Many major silver rallies have actually begun after one final rejection. The market attempts to break resistance, fails, corrects, and then later returns with stronger momentum. So even if silver initially fails to break this level, the larger story may still be unfolding. But what makes the current moment particularly interesting is the broader global environment. Inflation concerns remain present. Monetary policy continues shifting across major economies. Geopolitical tensions have increased uncertainty in global markets. During times like these, investors often increase their exposure to hard assets. Gold usually leads that movement, but silver often follows with even greater volatility. When both industrial demand and financial demand increase at the same time, the balance between supply and demand can tighten rapidly, and when markets begin to sense tightening supply conditions, price reactions can become increasingly aggressive. This is why many experienced investors are quietly watching the silver market right now, not because the breakout has already happened, but because the conditions for a potential move appear to be developing. At the moment, silver seems to be building pressure beneath an important level that many analysts believe could define the next phase of the market. If that level breaks, momentum could accelerate rapidly. If the market rejects the level again, a temporary correction could occur. But either outcome may reveal valuable information about where the cycle is heading next. Markets often move from long periods of calm into sudden bursts of volatility, and silver has followed this pattern repeatedly throughout its history. Right now, the market appears to be approaching one of those decision points, a decisive zone where the next major move may begin, a level where months of consolidation could finally resolve into a clear direction. And if the breakout happens, the quiet phase that investors see today may quickly disappear, because when silver finally escapes a major resistance level, the reaction often catches the market completely off guard. Momentum increases, volatility expands, and price begins moving faster than most investors expected. So the key question many market observers are now asking is very simple. Will silver break through this decisive level? Or will the market reject it once again? Because if the breakout happens, the next phase of the cycle could look very different from the quiet market we see today. And this is why 2026 could be the year silver shocks the market.